they can outbid your children. I mean, that's the bottom line that I want to talk about today. So what am I talking about? So RFK Jr. came out with a statement saying that investors by the year 2030 would own 60% of all single family homes. That's a lot. I mean, just think about the scope of that for a second. The three top investors who are buying up the majority of homes are BlackRock, Vanguard, and State Street. I want to also point out that those three investors, Vanguard is actually number one, BlackRock is number two, State Street's number three, those three investors combined own 88% of the S&P 500. If that's not a mind blow, I don't know what is. They can outbid your children. I want that to sink in for a minute because that scares the F out of me. It does. It scares the crap out of me. They can outbid my children. If I had known that 10 years ago, 20 years ago, 30 years ago, would I have done things differently? 100%. If I knew where we were going and where we would be today. AI just speeds up everything. Internet just speeds up everything. Everything is going to continue to move faster. And I'm not doing this as a doomsday call. I'm doing this as a wake-up call. So this past weekend, I just had my vision casting session, if you will, with myself. I sat at a coffee shop and I started dreaming about the life that I want to have for myself, for my kids, for my husband, for my team, for my clients, for the community that we've built. This came into that. When I heard this report this morning, now RFK Jr., I want to preface this with the fact that he is also running for president. So he is saying that these investors, these massive investors, they own 88% of the S&P. This massive investor group is coming after homes next. I mean, they can't own 100% of the stock market. So where do they go? They start to diversify. That is a word that we love to use because it's truth. Real estate is about diversification. And they're diversifying. They're owning more. They're going after more. I know personally several groups, even here in Denver, and of course across the country, that are actively buying single-family homes in the hundreds. If you've been out looking for a home, or if you're a real estate agent and you've been working for buyers, and you put your best foot forward and you put in that offer and you thought you had a really good opportunity to get that home under contract, and somebody came swooping in with a cash offer, you might want to think that those are investors, because that's what they're doing. 88%, like I can't get over that number. And if they're coming after the homes, what's next? So RFK Jr. is going to say that they're going to own 60% of all single family homes by the year 2030. There's another study that was done by MetLife that said that investors were going to own by 2030 40% of the single family rentals. Now, I've quoted that a number of times. I'm going to tell you it's probably somewhere in between. Let's just be real, right? So somewhere between what MetLife is saying, that investors are going to own 40% of the single family rentals, and what RFK Jr. is saying, that investors are going to own 60% of single family homes. I think his number's a little bit big. But does it matter? It's a question. Does it matter? Where do you want your children to live? Maybe you don't have kids. Maybe you just want to secure your own financial future. I have 3, and I know I want them to be able to not only own a home, but to thrive. I want them to have access to not only owning land and home ownership, because they're not building land anymore, but I want them to have the success that comes with that income that people call it mailbox money. I kind of don't love that statement, but it's continual, perpetual income. You're just setting up your own annuity plan. You don't need the pension from the corporation. You set one up using real estate, using the opportunity, providing a good, safe place to live. And in exchange, those renters are providing you with a financial future. One of the other things that were noted by RFK Jr. was the fact that corporations can afford to purchase more because their cost to finance is 30% lower than the wealthiest of individuals. And if you think about it, they've got investors coming in, creating these funds. With those funds, they're purchasing these large-scale investments, whether it's single-family homes, commercial buildings, apartment buildings, doesn't matter, right? So they're doing it through investors. They're providing a rate of return, but they're doing that not with the bank with the mortgage interest rates today. They're doing it with a long-term aspect of gaining appreciation, gaining tax deductions, gaining principal reduction even on their investors, right? And providing a capital rate of return. So they can borrow 30% lower than the wealthiest of individuals. Mark Zuckerberg is also extremely wealthy, extremely wealthy. He just bought, I think it was, what did I just read? A $5 or $6 million home. I'm going to say it's a $6 million home. I don't even know that it matters. He just bought a $6 million home. And the interest rate on his mortgage was 1.03. Let me just tell you, you can't get that. I can't get that. We can't get that. The wealthiest of individuals have banking relationships and have secured the opportunity to borrow at ridiculously low costs because they have so much capital sitting with banks, with investors, with investment funds, right? Makes sense. Mark just got a 1.03% interest rate on his latest home purchase. So if the massive institutional investors can get rates at 30% lower than the wealthiest, it's pennies on the dollar. Whether it's below 1% or above, it doesn't matter. It's David and Goliath. It makes you think. So here's my bottom line on all of this. I could look at it like a woe is me, I'll never win. Because that's easy. Because woe is me, I'll never win. I'll never be Mark Zuckerberg. I'll never be Jeff Bezos. But you know what I can be? I can be a homeowner. I can buy one home. And then I can buy the next one and the next one. And you know what the coolest part about this is so can you. You can. You can buy one and then the next one and then the next one. And you can secure your piece of financial freedom, your piece of independence and stability. You can do that despite and maybe ahead of these investors chomping up like Pac-Man 40% of the single investment SFR rentals or 60% of all single families. It's a little bit much, but it's somewhere in between. So that's your job today, is to break through the noise and the fear. And if you can afford it, it is time to buy. And so you can sit here and you go, woe is me, I didn't get it. I got robbed. Any of the things that you can think about, or you can think about the fact that they can outbid my children. And if I don't get in today, when do I get in? What am I waiting for? Am I waiting for rates to drop and demand to pick up? Am I waiting for prices to fall with low inventory? Or am I acknowledging what is happening, which is going to continue to increase and hold home prices higher, that I want to get in sooner? And I want to be here to support you. So you need to give me a call because we're going to talk through your strategy and we're going to put it in motion today. Nicole Rueth, talk to you soon.